Welcome to today's market report.
European stocks closed higher, notching a 0.9% gain for the quarter, as weakening hopes for China's post-COVID recovery and ongoing concerns over restrictive central bank policies held back an equities rally that began earlier in the year. The Pan-European Stock 600 index rose 1.16%, and MSCI's gauge of stocks across the globe gained 1.04%. Emerging market stocks rose 0.31%. MSCI's broadest index of Asia-Pacific shares outside of Japan closed 0.27% higher. The greenback lost ground against a basket of world currencies, snapping 2 straight days of gains after the strong PCE report stoked optimism that the Fed is approaching the end of its tightening cycle. The dollar index fell 0.42%, with the euro up 0.41% to 109.08. The Japanese yen strengthened 0.33% versus the greenback to 144.3 per dollar, while sterling was last trading at 1.2699, up 0.69% on the day. US Treasury yields softened on weaker than expected consumer spending data. Benchmark 10-year notes last rose to yield 3.821% from 3.854% late on Thursday. Crude prices settled higher but posted their fourth consecutive quarterly loss as investors worried about dampening demand. US crude rose 1.12% to settle at $70.64 per barrel. Brent settled at $74.9 per barrel. Gold prices rose in opposition to the softening dollar, logging their first quarterly decline in 3. All 3 major US stock indices surged, notching weekly, monthly and quarterly gains. It is nice cherry on the top to the end of a great quarter and an even better start to 2023. This was one of the best starts to the year ever for Nasdaq and large cap technology names, but let's do not forget they were the hardest to hit group in the vicious bear market of 2022. This is today's market report. Thanks for listening. We'll see you next time.